Good morning, everybody. Welcome back to the Schwab YouTube coaching channel for our Wednesday edition of Trader Talk in today's market. I'm your host, Kevin Horner. We're joining you from a beautiful Denver, Colorado today. As Wednesday, often the case, I am joined by my friend and fellow Schwab coach, Brent Morris. Good morning, Brent. How you doing, man?
Doing great. Yeah, glad to be here with you, and glad hey, we're kind of getting back in the groove of the new year and the trading year, and so I look forward to talking about that.
As do I. Our first full week of the year, we kind of got going a little slowly there Monday, and then got moving a little more nicely yesterday, as a matter of fact.
Yeah, interesting moves.
With some new highs, right?
Yeah. So I'm excited to talk about that because there's some interesting things in the market and some things that aren't that were moving that haven't been moving as much versus some things that used to move more haven't been moving as much. So we'll see.
Yeah, you're right, Brent. It's a helpful reminder that the market isn't the same from one year to the next. What was a leader may not be a leader going forward. We might be looking at some changes underway in our broad indices. So we're going to talk about a number of those things. As you know, we're going to get as many charts as possible today with all of you. Please take a minute, say hi to Barb Armstrong in the chat. She will get to comments and questions Brent and I are unable to get to, but as always, we're going to keep a close eye on what's going on there in the chat, because we do want to hear from you, and we do want to answer as many of your detailed questions as possible, at least as it relates to the broad market stuff. Individual equities we bring to the table based on headlines we have at our fingertips. So we'll do that at the latter portion of the show here. But if you've got questions specific to other groups, categories of the market, we'll do what we can to bring those to the table for you. So please don't hesitate to ask. Now, let's go ahead and get to our disclosures, and we'll jump right into things. So please remember that our discussion here is only informational and educational. We do not make recommendations. We do not make endorsements for any specific approach to trading here. We will cover technical analysis generically, meaning we'll discuss concepts and strategies that traders may choose to employ. But if you're going to do so, make sure you're doing so based on your own due diligence and plans for the market. So we're not recommending any specific approach, not recommending any specific groups or anything like to that extent. So just please keep all of that in mind. Now, of course, as is usual, we will follow our discussion approach that is top-down in nature. What that means, if you're new here, we start with our broadest indices. So we'll look at the S&P 500, the NASDAQ 100, the Russell 2000, move into semiconductors, transports, hit some of those industry groups within those sectors as needed, and spend some time with stocks in the news, as I noted. So that's kind of the level set for us as we kick things off. Brent, there's the look at the S&P 500, riding that 50-day moving average for the better part of the last, say, 8 months, 9 months now, and yesterday closing at a new high. So I'm constantly reminded, don't fight the trend, no matter what you hear from a narrative standpoint.
Yeah, and that's an all-time high, everybody. So, I mean, the trend has been strong. Yeah, we've seen we saw a little bit of a pullback kind of in November-ish time frame, but all along we've been saying, hey, the trend is still the trend, and we didn't break major lows that were really a concern. We're back above the 20, the 50, obviously the 200, I guess, but it's still until you get a more definitive break, it seems like the trend, even if we've seen some periods of weakness, isn't changing to that extent. And you can see that reflected where, RSI is still above the 50 level. We've gotten some higher lows out of that RSI there. And, I don't know. I don't see any compelling change in the future. Now, I don't know. I can't see the future, so I don't know. But there's nothing right now that seems very different than what we've seen the last year, basically.
Yeah. Going back to when we wrote out all the tariff tantrum discussion in early April of last year, we got going pretty quickly thereafter and have maintained that nice upward slope to our trend for 8-9 months here. Now, it is true that we're at highs, but our RSI is not at highs. There is an upslope to the RSI that kind of coincides with our recent lows, though. You'll notice we made a low in the RSI when we made a matching low at support back here at around 65.20. We made a higher low in price here. We made a higher low in the RSI, and now we've made a higher high in price by to the letter, right? We've actually got a new high all-time close, and our RSI hasn't confirmed it just yet. Now, that doesn't mean it won't, but it's not giving us confirmatory results from the RSI. What we would look to is, as we continue higher, can we push the RSI into overbought conditions? In the meantime, it looks simply like the rally might not be as strong. That doesn't mean it can't continue. Remember, we could easily see this continue to push without the RSI validating the break to new highs, Brent. And I just think that's a healthy reminder, because traders tend to look for prognostications from these tertiary details like RSI, and we can't do that, unfortunately.
Yeah, and I don't know that it helps that if the rally's too. I mean, I think the rally can be too strong at times, Kevin, in the sense that, I know that sounds weird, but a super big move in the market can mean a shorter term duration in the rally, I think.
Right.
And so slow and steady may be the key to winning the race here. And so I'm not sure I want to see that RSI necessarily jump way up. The trend is going fine right now without that. And so we'll see. A lot of times, there's a approach in the market where people look for overbought areas, and the RSI doesn't, this normal disclaimer, just because it goes above 70 doesn't mean the market's going down. However, whether it's RSI or the market forecast or whatever, a stochastics indicator, when you have a range and we extend to the high point of the range, then you start to see more people doing profit taking. Now, we've seen some profit taking on some individual equities here, maybe yesterday, maybe even today, continuing to today. That's what happens when markets move to extreme levels.
It's true. It is true. And as we're going to shift off into the NASDAQ 100, Brent, we can discuss this slight discrepancy in what we're seeing in the way of the trend here. We have not moved to new highs in the NASDAQ 100, the heavy tech-laden group here. And I think it stands to reason, as we'll look at some of these other expanded groups, but ultimately, Brent, I think what we're seeing is what many are referring to as the broadening out of our rally, meaning it's not exclusively tech of late.
Yes, if you were to look at mag stocks, they're not performing extraordinarily well right now. On the other hand, if you were to look at, say, S&P equal weight, SPXEW, what we're going to see is, just look at yesterday's performance on that. Look at the performance on that, how much it has gone up there. And just to, we can look at this, but if we look at, say, the percentage of companies that are above their 50-day moving average.
So let's see, I've got that here.
$ SPX A50R, for example.
Thought I had it loaded. SPX
A50R.
A50R.
Yes.
That's it. There it is. Yep. Trading above their 50-day.
Now,
there you go.
You see the move that we've had over the past. Now, remember, the market, we just looked at the SPX just a minute ago. We had a nice trend up since those April lows. Look at what this did. This shot up, and this was actually declining for a good period of that time. Yeah, here you have it on the bigger chart here.
Yeah, this is ultimately the same one here. This line I'm just highlighting right here.
Yeah.
There you go.
So it's just a little switched out, but you could see while the market was making new highs, this was going nowhere, showing the rally was not a broad-based rally. In this case, now we're starting to see, hey, this is actually moving up significantly over the past couple months, and meaning the rally is broadening here as we do this. We're not just talking tech stocks. Now, There's certain tech stocks that are doing really well. We'll look at them later, I think. SanDisk has been in the news a lot, and some of these memory type stocks. But the point is, the rally is broadening. You can see this with a lot of new stocks hitting new highs.
And this is what I mentioned earlier, Brent, about this type of view. If we take the understanding of what's changing relative to the 50-day moving average in S&P 500 stocks, and then go into, for example, the Market Watch page and our quote page, and we're looking at the sectors based on relative strength, either 5 days, 21 days, maybe the 89-day, you're getting a clearer picture of where things are moving. And right now, even though these aren't loading for me, what we would see is that our leadership have been in groups that are going to present in S&P, but not so much in NASDAQ 100. And you can see it more clearly. So if you're not familiar, everyone, with the component breakdown, I think the heat map does a really nice job of explaining it, right? Looking at the S&P 500, we see how big tech is here, but you've got access to all the other groups, right? Real estate, utilities, energy, materials, etc. If we looked at the NASDAQ 100, though, those groups, those latter ones, utilities, energy, finance even, these are extremely small components of the NDX, and that's why you're not seeing the NDX move the way that the SPX has, Brent.
Yeah, and that's it's just an important thing, and that's why we use different indices as we look at these.
Yeah.
That's why we don't just use the SPX. The NASDAQ is important because a lot of the stocks that make up a larger percentage of the NASDAQ are ones that sometimes can have a bigger weight in the market, but not always. And sometimes it doesn't mean they're outperforming, but it just gives you a good view there. And this can show you your 1-day result. But I like the page you had before with the different columns, and you can see over the last month, say, or you can choose your time periods of how things are progressing right there. You have a relative strength, 5-day, 21-day, 89-day. You could just use a return if you want on those as well. Sure. As an alternative way of doing it. Just any way to kind of measure your strength there.
That's it. And Brent, it's not to suggest that there's one way to go about it, but if you're a trader, trend traders, that is, yes, are looking to trade the groups that are in uptrends. And further, they want to take the next step, which is to trade the stocks that are in uptrends within the groups that are within uptrends, right? It's the whole top-down approach that we talk about so frequently here.
That's a key point. Let's distinguish between traders, and that's the approach we're typically doing with just like longer term investors aren't necessarily going to do that as much, not just look for most recent strength as to choose, heading back, decades now, Kevin, to be honest. My first approach to investing was I looked at returns for the previous year of what was hot. And I said, what performed best last year? Therefore, I'm just going to put my money. Now, fortunately, it was only like, $1,000 maybe or something like that, all into that. And then, lo and behold, it was up 80% last year. And then the year after as soon as I invested in it, it was down 50% or something the next year. I can't remember. But that's not, that blind approach isn't for everybody, but for shorter term traders, for traders, not just kind of long-term blind investing, looking at relative strength, looking at current strength is kind of a relatively common key approach.
Right. Yeah, it's popular, common approach, but it doesn't mean it's easy to get to. It takes a long time. The idea that what once was the leader can become the lagger is a hard thing to grab onto, and seeing that change when you turn the page on the calendar can also be kind of difficult to reconcile. It's why that first week of the year tends to be a little bit of figuring things out commonly, right? We're going to do a little bit of forward, we're going to go back 2 steps, maybe go forward 2 and then back 1. The point being that we are trying to figure things out in a new year. And the leadership is a little bit different so far. We'll see if it continues for the rest of 26, but so far it's been a little bit different. Now, Brent, I wanted just to last note as it relates to the NASDAQ is to keep a close eye on that white line, because this was resistance. Basically, it's been the level that we've been pushed back from for all of November, all of December. So you're looking at about 8 to 10 weeks of being beaten back from that ledge. If we can get through it, we can see some bullishness hereafter. But anything else you'd like to add as it relates to the NASDAQ before we kick off back to the smalls?
Just point out that's an ascending triangle, basically. So you have this horizontal resistance line, you have a diagonal support line. Generally, it's presumptively kind of bullish in the sense of, hey, it looks kind of bullish, but the traditional approach is wait for the breakout on that before we definitively declare that bullish. And so the horizontal line is the resistance on it. And conversely, if it breaks below the lower line, the diagonal line, that would be kind of more of a bearish signal on that. But but to your point, we haven't broken above it yet.
Yep. Exactly that. Yeah, watching these two lines is probably paramount for our next direction, right? Can we get above the white line and start making new highs? Do we break down from the uptrend line, and then our likelihood of maybe a retest of support back there at around 24 on the NDX makes some sense. So we'll watch that. Hopefully that doesn't come to materialize in a pullback, but rather a breakout. We had a nice candle day yesterday, Brent, on our small caps, getting through our downtrend line here. Kind of resembles a little bit of a bull flag, kind of a lengthy bull flag in here, but ultimately made new highs, pulled back to the supporting moving average, in this case, the 50-day. And then we had those three big, beautiful green candles to the upside there over the last 3 days.
Yeah, nice break up on small caps. And so, general positive across the board, really, on the markets, just some more so than others, I guess.
Mm-hmm. And it's actually a positive development relative to the broader indices when we get some leadership out of small caps, right? It speaks to the health of the U.S. market when small caps are leading. And it basically, because, these are companies that we know are debt laden commonly, right? You need debt to conduct business in many cases. And these individuals are benefiting from a reduction in rates, a pullback in rates. Noticing our yields have continued to stay under the 4.2 level, which I've kind of looked at as a very important level that we need to remain under here to keep a positive view on both the health of the economy, the opportunity in small caps, et cetera. Anything that you want to make note of here, Brent?
We've been kind of in a range, and we'll have to see what 2026 holds there in terms of Fed policy. There's a good chance we'll get a cut here at some point in 2026 at least, but that doesn't necessarily mean the long-term rates are going to drop a lot. We're going to have a new Fed governor there that there's a good chance he'll be more he or she will be more dovish, I guess, so to speak, than the past. But you're kind of constrained by the economics of it. And if labor and the strength of the economy start to falter, it would tend to mean we more likely a cut in rates. But if inflation goes up from where we're at, or inflation remains a bigger concern, then less likely probably a drop in rates there.
Great point. In fact, we're going to be getting an ADP number on the private sector employment today. That's going to actually come at the conclusion, or that came early this morning. As
that came
at 8:15. And I think the market's breathing a little bit based on that, right? Would you agree? There's been a little bit of as great as yesterday was, the digestion in the first 30 minutes here today has been all right. A little bit of profit taking, a little bit of settling in.
Yes, absolutely. In fact, we had certain parts of the market performed really well today, and I think we're seeing a little bit of a pullback on, which is understandable after you had like a rocking day yesterday there for people to take profits on that. And so that's you said digesting, kind of the same thing. There is after you get a big move up, a lot of times it's followed up with kind of more of a mediocre day, so to speak.
Yeah, not uncommon. And I think the reminder that I want to offer is simply that the market's going to go up a little bit, it's going to pull back a little bit. We are not seeing trend shifts as of yet in a lot of these areas. One of the other things, though, that's maybe starting to change a little bit relative to yields, Brent, is the home builder space. And I've been watching, I'm always keeping a close eye on this. I think that it's a big chunk of what could be opportunity perhaps in the year 2026. The home builder space, this is the U.S. home construction total stock. So you're looking at basically the combination of your builders and your suppliers, et cetera. Brent, they had a great rally here in the summer, and now we've unwound that rally. But I think what's changing here is the support relative to the 200-day moving average. And I think this could be a significant development with a second test in the last week on the 200-day.
Yeah, from a technical standpoint, I'm not going to say it's super bullish right now, but the kind of the bearish narrative is changing. That low back in November is kind of a key level. That would something we wouldn't want to break. And even better, as long as you mentioned, the 200-day moving average, if we can hold that, again, it's not like super bullish right now. You can see the trend isn't great, but if we're holding that, that's the first sign of a trend change. And this has had the sell-off. And, one thing that could hopefully support this a little bit is mortgage rates are down a little bit right now. They fell to 6.25%, which is the lowest in over a year here. So that is related to a lot of industries, interest rates, mortgage rates, particularly to home construction and things like that.
Yeah, I'm glad you brought that up, Brent. We didn't even touch on this, and yet I was prepped and ready for it, man. I hear utilizing our economic data, and we don't do this too frequently, so I'm going to note how we got here, everybody. Yeah. Go back to my economic data page. Basically, I'm going to go to the home. This is where we go. So we go to Analyze, Economic Data. This gives you the entirety of a multitude of information, everybody. I'm not sure that everybody's even aware that this information's out there, but here we can go into interest rates, for example, or actually, I'm thinking this mortgage rates is noted.
Yeah, right down there.
They are, right there, mortgage rates. And then right at the top is the 30-year mortgage rate, and that's what I did. Now I have changed the range. It is set to maximum now, but as you called out, Brent, as you notice, this is not going to look as clean a chart because this is a much longer range. Look at the beginning; it's 1973 back there. But if I zoomed in to basically what's gone on since, about 2010 approximation, you can see we had a huge jump post-COVID in those yields, right? And now we're back to a pretty interesting spot. Brent, I can see that under this ledge of 30-year yields, if we can get under 6%, it seems we would be improving the opportunity in housing quite significantly.
Yes, and that's a huge part of the economy, not just for the home building construction, but just for the average person in terms of home inventories and buying homes as being affordable. Yeah. And right now the housing market is, I don't want to say locked up necessarily, but it's not moving the way a lot of people would like to see. So, this can certainly affect that. Going back to these charts here, if you're going to use these economic data charts, just be aware, as Kevin pointed out, but you be aware of the time frame. Sometimes, in fact, on maybe most of these charts, I'd even say, you got to zoom in a little bit here to get the perspective. I mean, that's a good thing because that means you had a lot of data, historical data you can compare it to. And like with mortgage rates, wow, that's really interesting how high mortgage rates were in, the early 80s or something like that. But when you look at this, like I mean, that's, you go back, that's crazy.
It's crazy to think.
If you're worried about, if you're someone's fretting about how high mortgage rates are right now, just, give them a little perspective on that right now.
Yeah.
I said that a little bit in jest, but yeah, it gives you some historical perspective there. But on, not just mortgage rates, but other items on here. Remember, you can click on that home button that Kevin has that as his cursor there on there at the top of the page. It brings you back to this page. And then you can go in. Very often, like when we clicked on interest rates and we went to mortgage rates, it kind of brought the more popular item towards the top of the page. That 30-year interest rate was at the top. It doesn't always do that, but it typically, though, the more important stuff's right at the top.
Mm-hmm.
And there's a lot of other, things too, like even under interest rates. If you're interested about the yield spread, the curve.
Oh yeah, the curve.
You can go there. It says interest rate spreads there under the eyes.
There it is.
And you can click on that right at the top.
Here's your 10-2 yield spread, which is commonly the one that is monitored, right?
Yeah, and there's different ways to look at that. And by the way, those gray areas on the chart you can see the background of this chart. Those gray areas indicate recessionary times, but of course they're kind of backward looking too. So don't rely too much on those, but just from historical perspective, that's another thing. And then sometimes you may want to adjust whether it's showing in a percentage or a real term, for example. If you go to say like a CPI or something, you can change it right where Kevin just clicked there. It says percent. You can change percent from a year ago and so on. You can play around with that. But one other thing on these. Sorry if I'm kind of going on long.
No,
here.
It's great. Keep it up.
Those symbols up there, you can put those symbols in the regular charts as well, except just realize sometimes they don't, you want a line chart on a lot of these things because they're not, intraday, or candles don't really work out very well on those sometimes. So just be aware, but sometimes you can do that as a watch list there too.
Yeah, Brent, I'm constantly reminded of the depth of detail and information available here. And I thought today, hey, we're looking at, I'm going to check on Homebuilders, want to look at rates. Let's just remind our viewers that you have access to a multitude of detail and good information here in thinkorswim. So I'll tell you what, if you were looking to kill some time, you could probably lose a couple of hours on the economic data page specifically here because there's just so much going on. Okay, so there's a look at your Homebuilders, your 30-year yield relative to the 5 to 10-year yield, etc. I wanted to peek, Brent, on, we're getting a deeper pullback on semis today. Deeper in the sense that, okay, it's 1.5%, which is bigger than any other move we're seeing on the broader indices here. But we made a new high there yesterday in the semis. Not a bearish chart.
Not a bearish chart. And, as we kind of said before, after your big move, you expect, kind of a little bit of a breather. And that seems what we have right now. So I wouldn't fret too much about the pullback today, and 1.5% may sound like a lot. Well, I don't want to minimize it, but this is an index that tends to move a lot too. So when it moves up a lot, it can move down a lot. Typically, when we talk about risk goes both. The volatility, it goes both ways, ups and downs.
That is the truth, Brent. In terms of commodities, I thought we should take a quick peek at maybe gold and silver here. I'll just remind everybody we're going to use the futures symbols to do this, but we are not going to be discussing futures options trading. It does involve substantial risk, certainly not appropriate for all. Make sure you go through your requisite steps if you're interested in trading futures here at Schwab. But Brent, we've noticed a bit more volatility in the last couple of weeks here relative to gold. We'll see it also in silver here in just a second. But lower high that we just made yesterday, pulling back again today. It's a little bit choppy at these upper levels.
It is, and I don't know. I think a lot of it's probably just profit taking here, Kevin. I mean, gold has had a spectacular performance, silver as well. So it's not surprising that we're breathing a little bit on this. If we get more concerning economic data, maybe this gives us a little boost to the high side just from the safety perspective on this. But again, when we're looking at a trend, look at the trend, don't look at any one day.
Great reminder. I mean, yeah, is it a little bit choppy over the last week and a half? Yes. That doesn't mean a broken trend. As you can see, we're still holding the 20-day well above the 50-day. If we look at silver, this is maybe a little bit more volatile in the last week. We've had a bit of I think what we would talk about maybe in the last, say, month, a little bit more of a FOMO type move. My 20-day moving average hasn't even been remotely tested since it broke out of consolidation. It's actually been like the 10-day. So this has been a bit more volatile and a little bit more bullish. But would you at all be surprised to see this break the 10-day in the near term, given the action we've seen here in the last week?
No, not at all. Because number one, just generically, not even looking at this chart, I'm not surprised when anything breaks a 10-day, because a 10-day is a very short-term look at things. Number two, I think you brought up a key point here, Kevin, and that is silver traditionally isn't like the FOMO trade. Silver isn't traditionally a super volatile, hey, tech stock or, silver in the same thought, those are different beasts. But when people see there's a piling on effect. When people start to see huge returns, and people who would never even consider silver are going, hey, wow, this was up. I don't remember what percent it was up last year. They go, well, I'm gonna jump in. This is reminiscent of that first trade I did. I don't know the math on like 30 years ago, Kevin. When I saw something, it wasn't silver, but that had gone gangbusters the previous year, and I just kind of automatically assumed, well, if it did it one year, it's going to do it the next. Now, that's not my prediction that silver is going to crash or anything this year. I don't know what silver is going to do, but it'd probably be a little surprising if it goes up the same this year as it did in 2025. I'll tell you that. But who knows? I could be wrong on that. And it's right now, though, the trend is holding, but a break of the trend wouldn't surprise me.
Yeah, I think it's a great point. First of all, we can ride these 10 days for a lot longer than you think.
Yeah.
I mean, we were above the 10-day here back from August 22 all the way until this big candle really in October, excuse me. So basically 2 full months above the 10-day. So that's heads up 8 weeks. And then now we've been above it since November 25, which is in about the 6-week window. Doesn't mean it has that. There's a relationship there, but that doesn't mean that it's going to go 8 weeks, 10 weeks or anything like that. But I think a shift below the 10-day would be notable in perhaps the price of silver here. So that bears watching. But, it's different. We always say different between the price of the commodity and those that are maybe working the commodity, your miners and drillers and what have you. So be aware. There are opportunities nonetheless incorporated in that space. The other thing to briefly look at real quick here, Brent, was Bitcoin. The reason I say that, it has made a pop, but that pop was merely into an area that many traders would call resistance. In this instance, Brent, coincident with the 50-day moving average. And it looks like today, a little bit of risk here because we are in danger of trading below the low of the high day in this recent pop back into resistance. Yeah,
Bitcoin's kind of interesting because for a while we kind of had the thing, and I don't know, Bitcoin very well may go up, in the future. I'm just kind of talking a little bit longer term, going back over the past year or so. For a while, it was very popular, regardless of what people thought necessarily fundamentally or whatever about Bitcoin. It was a bandwagon trade to a certain extent of things going up, kind of like maybe silver's been, I don't know. And then it starts to fall out of favor, and then it kind of snowballs a little bit. Well, maybe we've caught some support. It seems like that downward trend we had was, we had a significant downtrend back at the latter part of this year. Looks like maybe we've caught some support here. The question is, consolidation or reversal of trend? I think we want to break about that 95 level or so before we start to consider that to be a reversal of trend.
I think so. I think so. Again, this is why we watch those moving averages, right? It's so important.
Yep.
Many of you have heard me say rallies that take you to resistance, hey, they're fun to trade. But if you make matching highs at resistance instead of new highs, then the likelihood is that the trend we came into, in this case bearishly, is more likely to continue than to break. Put it on the position to make those price moves to new highs so that you have a reason to be in the position. Right now, this looks like a continuation of the existing downtrend.
Yes. Now, in the chat, Jay Richardson said, hey, looks like a double bottom. Yeah, and what we'd want to see is we'd want to see it break that middle area, the middle hump there in the double bottom, which is that where your orange line is. So, and that would be a bullish reversal pattern, traditionally, is how we'd interpret that, if we do get that break. So, jury's still out on that. Maybe, who knows? Maybe today, probably not, but maybe today, maybe soon, maybe never. I don't know.
Well, one of the things you might look for here, everybody, if you're seeing a new trend develop, you would want to see Bitcoin hold the 20-day. So maybe we get rejected at the 50, but now we hold the 20. We've been above the 20 now for that 4 sessions in a row. And here, when we were above it for those 3-4 sessions, we were really quickly right back below it. So maybe if we don't give back to halfway of this recent range, then it's in theory possible that we could be looking at the development of a new trend. But that 94.5 number looks pretty important, coincident with the 50-day moving average there. I wanted to make sure we talked about that. Now,
let me mention just one thing here, Kevin. We're looking at the Bitcoin chart. We're not necessarily talking about trading Bitcoin right now. Digital currencies such as Bitcoin are highly volatile and are not backed by any central bank or government. And so, we're kind of looking at the price of the commodity right here. And when we talk about different commodities, these future symbols, we're not talking about trading futures. That's outside the scope of this class. All we're talking about is the price of the commodity.
Thank you for covering our bases, Brent. Always appreciate that. And I wanted to answer Sri here. Yeah, that could be the sign, the first indication potentially of a reversal. But you traders, hey, some of you will look at this pattern and say, I'm ready to deploy money. Others will say, I'm going to need more evidence. We're all a little bit different. Have a plan, know what you're going to do to step in, know what you're going to do to step out, whether that be for profit or for loss. Have a plan and stick to it as best you can. Now, Brent, I think it's important that we get to some stocks in the news. We had a couple of upgrades today that I wanted to hit on. The main reason I want to hit on this first set of upgrades is that I complain all the time about analysts upgrading stocks that have already made moves or downgrading stocks that are trading.
I've heard you. Yes.
It makes me crazy, right? I say it all the time. But we have 3 stocks that got upgraded by Oppenheimer, and they're all in the restaurant space, specifically McDonald's, Chipotle, and Domino's Pizza. And they're all in downtrends, it looks like, or at least not in uptrends. Here's McDonald's chart. A bit choppy. But, the point is, maybe Oppenheimer's done a little bit of forward-looking viewpoint here. They're stating that they expect a more bullish year on the restaurant sector into 2026 following the underperformance in 2025. Their top picks for the new year are McDonald's, Chipotle, and Domino's Pizza. And specifically, the McDonald's shares stuck in this $300 trading range offer. I love this. They're getting cute here. They offer up, quote, a golden opportunity for a breakout, end quote. So wanted to bring this one to the table. What are you seeing on McDonald's, Brent?
Nice little bounce, potential support. And keep in mind when these analysts give a buy signal or whatever. First of all, it's third party. It's not us, but also it's generally a longer term forecast. They're saying, well, we're talking about the year, we think it's going to go up or whatever. It's not necessarily a shorter term signal, but it does look like it's picking up some support. We had a nice little bullish engulfing yesterday on this. And today following it up with 0.5% gain or so.
And the range, it's choppy, but you can see it. It's basically 290 to 320 or so. And if we looked at this maybe on the weekly, let's see if those levels, see that. So in terms of a trend, Brent, it is still a casual, gentle uptrend. But you could see that getting it to say up through 320 would of course be a bullish development. And could signal more upside there. But nice to see that at least one analyst is a little bit ahead of the game in terms of the trend. But I like your call out on that bullish engulfing candle yesterday.
Yeah, and what was Domino's is another one.
Yeah,
that they were
Domino's
looking
as
at
well.
there.
Let's take a look at DPZ. Yeah, a bit of a downtrend here, right?
Yeah, downtrend, and so not from a technical standpoint, I would not call this as short term as bullish looking as McDonald's, but what you just drew in there, that's kind of a key level. We would not want to. We want to see that break from the shorter term period. But again, you go longer term, and you get kind of a different view than if you just just another call out to go look at different time frames in your charts.
There is, I say it all the time, Brent. I look at as many charts as I can.
Yeah.
I try and move the time frames around. Got to understand which is the prevailing trend in any given period of time. It's not a bullish pattern per se, but we are at an area that some traders would call support in a longer term time frame, and this may offer them an opportunity for entrance at a spot where, if the level is maintained, risk versus reward is positive for the bull here. So that's a note on Domino's. And then the last one there was Chipotle, also in a bit of a downtrend, also working its way back. It's at an area of potential resistance. I got to call out the fact, Brent, you've got 3 days in a row with tails. So it's tried to break out and it hasn't. So this level becomes fairly important here.
It does. So short term, that's I guess more of a concern perhaps.
Yeah.
Kind of a little bit more intermediate term, we were in an upward trend. So that's a little different than the other ones we've been looking at. We've had some higher highs, higher lows. This is after just a terrible 2025.
Oh my gosh.
For CMG. They were one of the worst performing companies in the S&P 500, or at least the S&P 100, I think. But looks like maybe they're turning around a little bit. I don't know what the future is going to hold, but someone who was it said, hey, restaurant ETF. Yeah, we can't talk about ETFs in here, but that is a thought. Let me just give a little plug here. We have a new Investing in ETFs webcast, or we used to have one, went away for a bit, but it's back. Mondays, 4:00 Eastern time, everybody, Investing in ETFs. And there they can talk about restaurant ETFs and stuff like that.
Great call out. I always love hosting the one we do on Fridays. Trader Talk, of course, is ETF day. Yep. And we do exclusively utilize ETFs there. Adding back the other ETF class, very helpful for a lot of you users of ETFs as well. But don't forget, we do have the Dow Jones indices to work with here. And that's what I threw up was the restaurants. So DWC, RES. Yeah. And I highlight this frequently, but you can do your searching here via the lookup and just start with $DWC, and you're going to get a list of available indices to consider. You got a lot of industry groups, sub-industry groups here that you can work through. This can do an exceptional job of helping you find and mine for your opportunities. You can also put these symbols into a larger watch list. If you're seeing what I've done here with the S&P 500 sectors, the 11 sectors specifically is that public watch list. But don't forget, you also have sectors and industries. It's a much deeper watch list, but it's also going to show you those industry groups, those sub-industry groups where you have those opportunities. So make sure you're spending your time doing the work here, everybody. The thing that stands out on this chart, Brent, is that higher low it just made. If this space is in fact ready to get itself in gear, the fact that it broke a downtrend line and then retested the short-term moving average before moving off of it, this is starting to look a little different. Now, it's not above the 200-day, but you might be in the midst of some action that could be telling us something different is under development.
Yeah, the shorter-term action is strong. We had a 20-50 crossover. That's generally bullish. We're above both the 20 and the 50. That's generally bullish in the shorter term. And the 20 the slope of the 20-day is up. The slope of the 50, no, it's not, but that could change in the next few days. Certainly, that's possible. Yeah, the 200-day would be kind of a level to keep an eye on, but it does look like the winds are shifting a little bit here on this.
Yeah, it's just a little bit different, and coupled with some shifts in analyst research, it stands out. Worth keeping an eye on, at least, if nothing else. So, hey, Brent, I think we're at time today. You know, we've, as usual, our time flies in this class. And today in particular, we touched on a number of key areas we don't traditionally get to. So I hope we opened the eyes for a number of our viewers today. But as always, I love having you on a Wednesday, man. Thanks for being here. Thanks for sharing your thoughts and insights.
Hey, I always love being on with you, Kevin, and I just encourage everybody to check out Trader Talks throughout the rest of the week as well. Not just on the day I'm on, but I do look forward to Wednesdays.
Appreciate you, Brent. And thanks to all of you for being here in the chat. Had a very lively chat today, of course. Great thanks to Barb for managing that. I'm off to Dallas, so that means I will not be hosting Thursday or Friday Trader Talks. So thanks to my peers for stepping in there. But I do look forward to seeing those of you in Dallas who can attend the in-person event. That's going to be fantastic. Come by and shake hands. Love to see you there. If not, make sure you're checking out the registrations, and you can get to one of those events in the near future. We'd love to see you there. Hit that thumbs up for us. We're going to get this one archived and back into the YouTube channel as quickly as possible. Follow us on X, Barb Armstrong CS, Brent Moore CS, and Kevin Horner CS. The best way to find us when we're not hosting classes for you here. So thanks for being here, everybody. Have a great Wednesday. See you again real soon.